Yo, what's up guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a quick look at a stock that I've been watching for a while now, and I think it's got some great opportunity. So let's jump in and take a look at it. You can tell me what you think. Alright guys, welcome back. First things first, this video is for entertainment purposes only. I am not a licensed stockbroker. You should always go out, do your own research, do your own due diligence. Don't just take my word for it. Before we get started, subscribe to the channel. Hit the bell notifications, hit all so you can stay up to date, get notified every time I post a new video. Real quick, everybody that has been subscribing, thank you so much. Like, much love. I love you so much. I just started this channel a month or so back, and we're coming up on 300 subscribers. It means the absolute world to me. I put a ton of time into researching and putting the videos together, so thank you for the support. Down in the description, there's a link to my Patreon account. Come join me over there. You'll get access to the private Discord. We can talk stocks, anything you want to talk about, I'll talk to you about. You'll also get links to a couple different portfolios. I've got a couple high growth portfolios, a penny stock portfolio, and I'm actually adding a value portfolio in the next week or two. And then you'll also get buy and sell notifications every time I buy or sell a stock, or every time I get an alert, or I'm about to take a swing trade or anything like that. I send out everything that I do when it comes to buying or selling or what I'm watching, so you can keep up with that. Then take advantage of the Webull link down below. You set up an account, deposit $100, you get some free stocks. I get some free stocks. Help support the channel. We're all happy. But let's jump in and take a look at this stock today. So today we're going to take a look at Digital Turbine. The ticker symbol on this is APPS. Yeah, I've been watching this stock for a long time, like back in November, and I do not own it. I do not own this stock right now. I've been wanting to buy it, but it kept running and running and running that I was waiting for a pullback. I should have got in when I initially, found it, but I didn't, but whatever. So as of right now, these guys have kind of two core business models. What they do, Digital Turbine's on-device media platform makes it easier than ever for people to discover new apps and content, for operators and OEMs to boost their revenue, and for advertisers to reach users at scale. You can see here they've got some huge partners that they're working with, really big names in there. What they pretty much do is they've got two sides here. They've got for operators and OEMs, so cell phone manufacturers, companies like T-Mobile, Verizon, AT&T, then like Samsung, and then they've got their for advertisers. So they're kind of like a middleman. So they'll take they'll partner with a company like Samsung, and essentially they are the middleman to work with the advertisers, the app builders, to put their apps on the front screen of Samsung's devices, and then they take a piece of the revenue, so it gives Samsung an extra revenue stream, cuts out all the pain and headache of having to deal with those advertisers, and then the advertisers get their apps on the phones without having to deal with the big companies. And so it works out for everybody. They've put themselves in a real nice position as a middleman to make both of the two people lives easier, right? More effective, more efficient, and then their software really helps the advertisers get their apps with more downloads and things like that, but we'll go into that. So this is their website. You can go check them out. They've got over, I want to say it's even more than that now, 400 million month or more active users, 109 different countries, 40 different partners. Yeah, go check this out. They've got some really cool stuff on there. They've been acquiring some companies, but let's talk a little financials. So as of revenue goes, in 2017 they did 400 million. They did 74.8 million in 2018, 103 million in 2019, and then they did 138 million in 2020. Their fiscal year goes from March to March. So 2020 would be March, the end of March 2019 to the end of March 2020. That would be fiscal year 2020. So 2021 will be fiscal year 2021 will be March of 2020, the end of March 2020 to the end of March 2021. So fiscal year 2020 would be end of March 2019 to end of March 2020. Their gross profit was $12 million in 2017, $25 million in 2018, $35 million in 2019, and then $53.7 million in 2020. They're expecting their sales revenue to jump to $300 million in full year 2021. So they're expecting to report $300 million in 2021, so the end of March coming up. That is more than doubling their revenue from 2020 fiscal year. So huge growth there. What I really like is they are planning to scale that. It is expected to grow to 1.1 billion by 2026. Huge scalability there when it comes to revenue growth. They just reported Q3 back in the end of for Q3. It ended December 30th. They reported back in February, beginning of February. Their revenue increased 146% to 88.6 million year over year. Their net income jumped from 3.3 million to 14.5 million, which is huge jumps there. I mean, this company is just growing parabolically. Their free cash flow was 22 million compared to just 7 million, same time 2020. And then their gross margin grew about 3% from previous year. And then also in Q3, their Ignite software was installed on 65 million devices, and their total installations were more than 570 million. So just consistently growing their reach. So they've got two types of services, like I said, for OEMs, manufacturers, and advertisers. The Ignite is more for the OEM manufacturers. The Single Tap is their, in my opinion, more meaningful, product, or whatever you want to call it, software. I saw something that I don't know if it was the CEO, but somebody over at Digital Turbine said that it is now a 7-figure monthly business, and they are trying to continuously add zeros on the end of that. What that software pretty much does, so best way I can explain it, say you're playing a game on your cell phone and an ad for Starbucks pulls up, whatever. So typically you would have to click on the ad. It would take you to the Google Play Store, because that's a downfall. They are only on Android right now. And I think that their software only works on Android. So it would take you to the Google Play Store. And I've never owned an Android, but I think you have to then search for the app, or it might take you right to the app, but then you have to literally download it and then jump back into your game. So, if you're playing a game and you don't want to quit the game, you're not going to download the app most likely. And if you do click on it and it takes you out of your game, and then you have to go through these extra steps, most of the time you don't even get the download anyways. Those companies don't. What the Single Tap does is when they're playing the game, they see the ad, they can just click it, and it will automatically download without even skipping a beat, so they can stay right there in their game. So that's going to increase efficiency and effectiveness a tenfold. The reason why they, I think, have a really nice middleman spot is because they provide the OEM manufacturers a extra stream of income, and the real estate on phones is getting more and more precious. So these app developers obviously love working with them because it gets their apps on these phones. Now they partnered with Samsung. That's one of their big partnerships. Samsung pretty much just allows them to put their app on the phone, and then they split the revenue. They did 13 million phones last quarter for Samsung, but they still have there's a total of 40 million Samsung phones in their demographic that they can work inside of outside of the US. So they still have 3/4 almost. They did about a little over a quarter of what the phones they have. So they still have a lot of phones there that they can continuously put on those devices. They've also had some cool recent partnerships with LG and Xiaomi, I think is how you pronounce it. And then they've got some partnerships with like some local phone makers in like India and stuff. What I like is their acquisitions. They've been buying companies, trying to rapidly grow. They bought Mobile Posse like in the middle of 2020. What Mobile Posse does is their app is essentially an app that goes natively on your cell phone. So like, the apps that come with it. So like the news, the weather, the sports, advertisements, things like that. When they made that acquisition, it accounted for 31.7 million in revenue from about 10 million daily active users. That doesn't even scratch the surface. I mean, they've got 600 million devices that they can monetize within their given demographic. And so that's why I think that this company still has a lot of gas in the tank, even though they've been running so hot lately. That acquisition with Mobile Posse also accounted for 50% reoccurring revenue model, and that's growing continuously. Now, there's a couple catalysts that I want to talk about that I think will help push the stock further. There's a couple risks I want to talk about. So in 2020, phone sales were pretty stagnant in the US. People were just hanging onto their cell phones a lot longer, probably due to the pandemic and whatever. With 5G coming, that's going to help. I mean, I think with the new 5G phones coming out, more and more people are going to want to trade in their old phones that are 4G and get the new 5G phones so they can get a lot faster speeds. That will give them a bump because the more devices out there, the better. The more phones in people's hands, the new phones getting bought, the better for them. So I like that. The other thing that I think will help these guys is advertising rates are continuously rising for app placement. Being in the web design and marketing industry, I understand the importance of ad spend and ad rates. I'll give you an example. If you're a company and you're used to paying, let's just say 50 cents a click to get your ad placed on Google, and every year it's raising by 30%, 40%, well, now you're having to pay more for the same exact ads. But if it's your primary source of revenue, it's the only way you can generate income, then you just have to pay it. And so with that being said, the real estate on the front of these cell phones are getting more and more valuable for app developers. And so they're going to have to continuously pay those increasing advertising rates in order to keep their apps on the front of those phones. Now that will account for a higher revenue per device. Because revenue per device has grown about 25% in America, but it's grown 70% internationally because of the way that it works differently in America than it does internationally. From my understanding, internationally, the OEMs pretty much sell the phones unlocked. And so they don't really control what apps are being placed on the front. Whoever buys them to resell them decides that. Where in the US, the manufacturers have their native apps and that's it. That's my understanding. If I'm wrong, correct me down in the comments. And then also their tier one customers like AT&T, Verizon, those partners, they can continuously push the software out to even existing devices. And so that can really help accelerate their growth and help them scale pretty rapidly. Now, is that going to happen? I don't know. I'm just saying it could. And so as their relationships become better and better with these big tier one companies, they've got some room there. And then also they said that they're expanding into different devices like TVs and things like that. So if they can continue to expand into different devices, I think that can help. I mean, I'm a big fan of doubling down on what you're good at. Obviously they're good at what they're doing, at their middleman, software that they're using. Maybe they scale out to other devices. It doesn't go as well. I don't know, but I would imagine it will. Because it's such a good thing for both parties. Now, the things that I don't like, I do think the stock is way extended right now, and I think it's overvalued. I think the stock is trading at crazy valuations. When I did the math, I saw that it was trading about 76 times. It's EBITDA, which is high. I do see it having more gas in the tank, and I do see this having a path to a $100 price target. There's a couple things that would need to happen for them to get to a $100 price target, and there's going to be a huge difference between investing in this stock and trading this stock. That's something that I've been meaning to talk about. You're either an investor or you're a trader. You can do both, but make sure you define what you're doing when you invest into a company. Warren Buffett said some people just shouldn't own stocks. Because they buy stocks and then they get huge emotion over short-term price fluctuation and they sell, when their stock is down. If that's you, you shouldn't do that. You shouldn't own the stocks because you either have to make the decision that you're going to trade it or you're going to invest in it. If you're going to invest in it, you're planning on holding it long term and you need to have conviction in the companies that you buy. That's why I haven't bought this company yet, because I wasn't sure. Now I like it because I think they will do well long term. But if you do buy this and the price continues to fluctuate lower, an investor is going to cost average down. If you're going to buy it to trade it, that's fine too, but just make sure you understand where you're at. But with that being said, a couple things would need to happen for them to get to $100, and I do see it being doable. First thing they would need to happen would they would need to hit their revenue estimate of $707 million by 2024, and then they would need to hit about a 34% EBITDA margin on that $707 million. That would put them trading at about 37 times EBITDA, which is a lot more reasonable for a $100 price target. So yes, what I'm saying is I do think that they've got a path to a $100 price target by 2024. That's a long time, but that is still getting back up to the previous highs of what it's already hit. Let's take a look at the chart real quick. And then the other risks that I think before we look at the chart is they're only on Android. So if Apple happens to take over a massive percent of the market share on mobile devices, that's going to kill them. The other thing is if they fail to renew any type of contracts with their big partners, T-Mobile, AT&T, things like that, that could really hinder their growth, even though, I don't see that happening because it makes it an extra stream of revenue that's a lot more clean and efficient than they could probably do it on their own. So I don't see that happening, but that is a concern. So if we take a look at the price here or the chart, I started watching the stock back in November when it had this big sell-off right here during October. It was sitting around, $28. It ran up, kind of traded out, traded sideways, but since then it has just been growing like crazy, wildfire. Got to clear up to a high of $102. And then, clearly it's hit this resistance point right here at 95 twice and gotten rejected back down. I wouldn't buy this stock right now, and I'll tell you why. Couple of reasons. So it hasn't came down and filled this gap yet, which it may not ever do, but it could. So what I would do, the other thing is your MACD is curling down, so is your moving averages on a 4-hour chart. Let's take a look at it on a daily chart. Same thing. You're kind of curling down here. Not too bad. It looks like it could start to trade sideways, but your MACD is still curling down, and you're getting huge divergence right here on your MACD, which could signify a reversal. So what I would do is I would wait and either wait till you get a confirmation of the MACD starting to curl back up, the moving average starting to curl back up, and a bullish candle to close above the 20-day moving average. That's what I would do. I would wait for it to close above and signify that the uptrend is moving back up towards the upside. Again, if you are planning on holding this stock for, 4, 5, 6 years, then yeah, $74 is not a bad price. Again, you are paying 76 times, EBITDA on it and a huge PE, but this is a growth company, obviously. It's a growth stock. I think that it does have room for growth, but you have to know what you're investing in. This isn't a value play. Value investors would probably stay very far away from this, but I like it because I think it's got a lot of room for growth. I think it's a real hungry company, and I think they're going to continue to do very well, especially with the implementation of 5G cell phones. So that's what I'm doing is I do plan on adding it, but I am going to wait and kind of see what happens. If it comes down here and fills this gap back down around the $64, $65 range, I'm going to be looking to put an entry in. You know, I would love to get it back down here around the $65, $60 range. If it doesn't, and I can see that it's going to start making a nice, you know, consistent move back up to the uptrend, I probably won't take an entry if it gets past 80, 85, because you could run into resistance right here at 95. Again, just, you know, I would just wait until you see the trend start moving back up towards the upside. You know, you get a close above the moving average that you can signify that you're back into an uptrend, you know, and just watch it. You know, what worries me about giving price targets and stuff like that is, you know, people see the video 3 weeks later, buy it at the top, it goes down. You know what I mean? I try to give you the best information I can. I tell you what I'm doing. Always do your own research. Don't just blindly buy something, you know, that a YouTuber tells you, because you need to have conviction in your stocks that you own when markets go into downtrends. If you buy a stock blindly and a market goes into a downtrend, you're going to panic, you're going to sell, and then you're going to be pissed off at the YouTuber probably. But if you've got conviction, then you're buying through that downtrend. So again, I don't own it yet. I do plan on adding it if I can find a good entry. So that's it for today, guys. Thank you so much for watching. If you have any questions, put them down in the comments. You know, if there's anything, any tickers or any stocks you want me to cover, you know, put it down in the comments as well. Come join me at the Patreon. I'd love to see you over there. I'm going to do a little bit more Patreon only videos here shortly. I'm going to start putting together like my swing trading videos, my strategies, things like that, so I can give that to those guys, and then do you know, a really cool alert system for any swing trade that gets you know, triggered, to send that out as well. So come join us you know, over there, and I'll see you guys in the next one. Peace.